Hello and welcome. This is Roy. This time I'm sharing with you a clip taken from almost 90 minutes video that I just finished to record for my subscribers. You will see me introducing the markets that I cover. The video is very comprehensive as usual when I record for the weekend, giving you a whole perspective of things that occurred in the last week and looking forward to the coming week and beyond. I also specify and clearly analyze the very best opportunities that I see for immediate trading starting Monday. So for those who are keen on getting into the action, whenever I see a situation that is highly probable in terms of coming to fruition within, let's say, 2-3 trading days, I alert you and I explain to you exactly the levels, when to get in, etc. You can have access to this long video plus 6 others if you only give a chance to my service by taking a weekly trial. You can ask me any questions you want during the weekly trial while you are a trial member, and I will do my best to answer them. You can pay with PayPal, Paysa, or Money Bookers, or we can discuss a different method of payment if you like. Get in touch with me by all means. If you have any question, don't hesitate. I'll be glad to help. Other than that, I wish you have pleasant viewing and have a good week. Bye now. So here's the list of all the charts that I have. I have the dollar index, the euro US dollar, the US dollar Danish krona, Australian dollar US dollar, New Zealand dollar US dollar Norwegian krona, and then British pound US dollar, British pound Singapore dollar, British pound Canadian dollar, British pound Japanese yen, euro Japanese yen, US dollar Japanese yen, the euro British pound. And then I'll have a look at gold, silver, TYX, TNX, UST bond, TLT, the Dow Transportation Average, the Dow, the S&P 500, the S&P 100, the Nasdaq 100, the CAC 40 of France, the FTSE of the UK, STI of Singapore, Chinese Securities Index, and I'll terminate the video with a look at the ASX of Australia. Now, out of that very long list of charts, there are basically 4 charts that I see as very interesting, very short term, and some of them and as I go through, I'll tell you. The first one, if you're looking for an opportunity to trade, I would say for the next 3 to 4 days, trading days, take a sharp look at British pound Singapore dollar. Okay, British pound Singapore dollar and British pound Canadian dollar. I think that those two markets are now in a tight trading range for 4th wave, and will have a plunge of the 5th during the coming week. So that could be very profitable. Sorry. Next, I think that you should look at the USD bond, the USD bond chart. That is an opportunity that I think will develop during the week and will reach probably the beginning stages of the next big drop towards the end of the week, or it might spend the entire week just in a trading range, but will have a big boom down, if not this week, next week. Sorry, the most important chart, without a doubt, in my opinion, concerning the US markets in terms of clarity and proportion and price behavior is the S&P 100. The S&P 100 is something that you really have to consult closely, and I will get to it and you will see why. Okay, that's the Dow Jones Transportation Average, that's the monthly. We made a case over quite a few weeks when it was soaring that we are leaving behind a massive inverse head and shoulders, and I was calling for a rally that would last for a long time. The reasons for that analysis are still valid as I'm talking to you right now. there are two things on the horizon that, if you like, are not connected directly with the technical picture that you see, but are things that we must consider. It could be actually quite worrying. One is that margin levels are fairly high. We have examined it a few weeks ago. We looked at margin levels on the New York Stock Exchange. They are near record high. This is really dangerous. And another thing is that rates are soaring. Normally, if rates are soaring, for a healthy economy, the economy is moving and things are beginning to move in the US, then I guess it'll be positive long term, and we will see the market continuing up. But there is a danger that the decoupling between the rise in rates and the stock market that is looking really very euphoric in the US, only in the US. In certain indices in the US, the situation is absolutely euphoric. There is a danger that rising rates would instill fear in investors, and we will have, if you like, huge catching up, where the rates will shoot up very quickly as they're doing now. They will continue to shoot up very quickly, and stock market will take a dive. That happened in 1987. For those who remember, in 1987 we had this gap opening. Rates were rising up, bonds were falling sharply, and the stock market will continue to go up. Not worrying about anything, and then there was a catch-up, yes, and that was very unpleasant. So this is the two elements that I, from memory, see as very dangerous on the horizon. But the technical picture for now is still allowing for a continuation of this. So on the monthly, and you will see other indices in the US that are saying for now there is no worry. This rally is on track. And I've examined it recently. I suggested this is our first leg up, and I said that the correction that we have seen here is unlikely to be the entire correction to this. And I still think this is the case. This is unlikely to be all the correction, and it is calling for more time to be spent here as part of the correction. And I was that's the daily now. I subdivided this as 1 2 1 2 3 4 5 3 4 5. We said this in ABC, no problem. It appears to me that even if it rallies a bit higher here, that's not going to change materially my analysis. I would still expect it to come down towards 6,000, even lower, to complete a more lengthy second wave that will do justice to the first run up in terms of the time scale. Well, you can see clearly what's going on. This took less than 2 months, do you see? And the rally up here took 1, 2, 3, 4, 5, 6 months. So I don't think it's ready. If it is indeed the case and I'm wrong, and this is 1, 2, then we are in a fabulous run. And this will become very clear very soon. Because if this one continues straight up above 6,600, just continues to drift up, that's it. This is the right wave count. Let's have a look quickly at the 60 minutes. And I was suggesting this is A, this is B, 1, 2, 3, 4, 5, that's C. That's an A, that's a B, 1, 2, 3, 4, give it another pop. Yes, pop towards 65.50. That'll do the trick, and then start reversing and breaking down under this level would most likely be a confirmation, which comes at 63.75 or so, that we are heading a lot lower. Now that was the